pressure for that. And as Sony pulls the plug on this $10 billion merger with Zee, it brings the focus on the stake of mutual funds in Zee Entertainment. Hormaz is here with the details. Hormaz.
You know, it's a clear-cut example of how trading is a hope trade. Now, since the merger was announced in December of 2021, every single quarter since then, India's mutual funds have increased their stake in Zee Entertainment. Now, when the merger was announced of 22nd of December of 2021, at the end of that December quarter, the mutual funds had around 12.1% stake in Zee Entertainment. Now, come December 2023, 2 years lens, the current stake of mutual funds in Zee Entertainment is almost 32.5%. So it's almost a 20% rise in stake over the last 2 years as the deal talks have progressed. There has been plenty of back and forth, but mutual funds have continued to increase their stake in Zee Entertainment. Now, which are the funds that have the maximum exposure here to Zee Entertainment? First up is ICICI Prudential. Their Value Discovery Fund has almost 7.25% exposure to Zee. The Nippon India Multicap Fund has a 6% exposure. The HDFC Midcap Fund has almost 5.25%, and the Kotak Arbitrage Fund has 2.5% stake. Some of the other funds include the Aditya Birla Sun Life Arbitrage, the Tata Large and Midcap Fund, and the HSBC Value Fund, which hold close to 1.5 to 2.5% stake in Zee Entertainment. Now, while mutual funds continued to increase their stake. Now, this happened side by side along with when Zee's largest shareholder at the time of the merger announcement, which was Invesco Oppenheimer, they exited the stock gradually. And at the time of the merger announcement, the Invesco Developing Markets Fund and the OFI Global China Fund had around 7.7% and 10.1% stake in Zee, which combined to around 18% stake. Now, while Invesco exited by selling its 7.7% stake in April of 2022, the OFI Global China Fund sold 5% stake come December of 2022 and then made a complete exit in April of 2023. Now, both of them were the largest shareholders at the time of the merger announcement. Now, aside of these funds, there are also insurance companies that own stake in Zee Entertainment, and all of them are listed companies. HDFC Life, SBI Life, and of course, India's largest insurer, LIC, which still holds a 5.1% stake in Zee Entertainment. Now, since the time of the merger announcement, the Zee share price was around 350 rupees. Now, since then, the stock has never retested those levels. Now that there have been multiple brokerage downgrades as well, they don't expect the stock to even reach 250, considering the downgrades that have come by, with targets ranging from anywhere between 180 rupees to as low as 130 in case any potential competition merger deals happen. So it's not been a good day for Zee Entertainment. The stock has extended its lower circuit now up to 15%. The brokerages are bearish. Now all eyes are on mutual funds.
Right, it's actually down now a full 20% on the stock. Hormaz, thanks a lot for getting us all of those details. That is the latest on Zee. But